Welcome, listeners, to another deep dive into the latest market movements and tech-driven narratives shaping the financial world. Today, we're unpacking a vibrant green heat map in the stock market, fueled by whispers of a trade truce and the anticipation of big tech earnings. Let's explore what's driving this optimism, the sectors in focus, and what it means for investors. Market euphoria, trade truce whispers, and tech earnings anticipation. The market is buzzing with positive vibes, largely due to hints of a potential trade truce between the US and China. While details remain scarce, the mere suggestion of reduced tensions is enough to lift investor sentiment, reminiscent of the temporary relief seen during the 2018-2019 trade war negotiations, when similar rumors spurred short-term rallies. Historically, such geopolitical developments have provided bursts of optimism, though they often come with volatility if expectations aren't met. This time, the stakes are high as global supply chains remain strained post-pandemic, and any de-escalation could ease pressures on sectors like technology and manufacturing. Adding to the bullish sentiment is the upcoming earnings season for the Magnificent Seven tech giants. Microsoft, Apple, Alphabet, and Meta are all set to report this week following Tesla's results last week. Investors are positioning themselves ahead of these announcements, expecting strong performances driven by continued investments in AI and data centers. The tech sector, as seen with names like Nvidia and Google showing robust gains on the heat map, is leading the charge. However, with high expectations already priced into many of these stocks, Apple, for instance, has seen significant run-ups. There's a risk of disappointment if results don't exceed the lofty bar. This dynamic echoes the dot-com bubble era, where tech valuations soared on future promises, only to correct sharply when growth slowed. Sector spotlight. Tech and AI continue to dominate. Drilling into the tech sector, we see standout performers like Advanced Micro Devices, AMD, up nearly 3% to a new high, fueled by strong technical indicators and growing demand for GPUs. AMD, alongside Nvidia and Broadcom, is well positioned in a market where demand for AI hardware is projected to outstrip supply for years, as highlighted by industry analyses. This insatiable appetite for AI infrastructure mirrors the early days of the cloud computing boom in the 2010s, when companies like Amazon and Microsoft saw exponential growth from data center investments. Another name catching attention is Palantir, which is riding high on new deals, including an extension with Lumen worth $200 million. While the dollar amount isn't massive, it underscores Palantir's role as a critical player in AI infrastructure for both government and commercial applications. Long-term, Palantir's vision aligns with the transformative potential of AI, much like Oracle's pivot to cloud services a decade ago. However, with its stock at all-time highs and some choppiness in its chart, investors should brace for potential pullbacks, viewing any dips as buying opportunities for a long-term hold. Broader market risks and opportunities. Despite the green across the board, there are pockets of caution. Some profit-taking is evident in individual names, and a broader market correction of 5 to 10% isn't out of the question if negative catalysts emerge alongside earnings misses. Yet, the overarching trend remains bullish, driven by AI's relentless momentum. This environment is reminiscent of the post-2008 recovery, where tech-led growth sustained markets, even amid broader economic uncertainties. For investors, any correction in this uptrend should be seen as a chance to enter or add to positions in fundamentally strong tech names. Globally, the potential trade truce could have ripple effects, particularly for tech-heavy economies in Asia and Europe, where supply chain stability is crucial. A resolution could also bolster emerging markets, which have lagged due to trade war fears. However, domestic policy uncertainties, including the U.S. election cycle, could introduce volatility, as seen in past election years like 2016 when markets gyrated on policy speculation. Investment and policy implications. For investors, the current landscape suggests a balanced approach. First, prioritize tech leaders with proven AI exposure. Names like Nvidia, AMD, and Palantir offer growth potential, though entry points matter given high valuations. Diversify into sectors that could benefit from a trade truce, such as industrials and materials, which often rally on improved global trade outlooks. Set stop-loss orders to manage risks, especially for speculative plays, and consider dollar-cost averaging into overheated stocks during pullbacks. From a policy perspective, governments should capitalize on this moment, to push for sustainable trade agreements that prioritize tech innovation and supply chain resilience. Incentives for domestic semiconductor production, as seen with recent U.S. legislation like the CHIPS Act, remain critical to reducing reliance on foreign supply chains, a lesson learned from the 2021 chip shortage crisis. Near-term catalysts to watch. Over the next week, keep a close eye on big tech earnings. Strong results and forward guidance on AI spending could propel markets higher, while any sign of slowdown might trigger profit-taking. Additionally, watch for concrete developments on the trade truce front. Official announcements or high-level meetings could serve as immediate catalysts. Lastly, monitor macroeconomic data, particularly U.S. consumer confidence and manufacturing indices, as these could temper or amplify market reactions to geopolitical and corporate news. Conclusion. In summary, today's market optimism is a blend of hope for geopolitical relief and confidence in tech's unstoppable march forward. While risks of overvaluation and potential corrections loom, the long-term narrative remains one of innovation-driven growth, particularly in AI. For investors, this is a time to stay nimble, seize opportunities on dips, and maintain a keen eye on upcoming catalysts. As we navigate this dynamic landscape, remember that markets often reward patience and strategic positioning. Stay tuned for more insights as we track these developments, and happy investing.